Welcome back, YouTube. So in today's video, we're going to talk about the possibility of setting up this new trend here. We're going to do a look here at Doge and Bitcoin. But what we're seeing here is a possibility for a fourth green day in a row. Right now, yes, I know Doge is red. Again, this is a daily candle. We'll see where the candle actually closes. But if we take a look here over at BTC, use this Coinbase, doesn't matter right now, you'll see that it is in fact green, and it's looking good. It has a pretty good chance at closing green today as well. So we'll see kind of where this propels the market, and maybe we'll have the opportunity here to get to position ourselves here for some positive signals in the other direction. Now, what I will say is, which is what I've been saying in the last few videos, we are still in September. This is historically known as a bloody month. So do not necessarily, if we are having a rally, I'm not saying that, oh, like the bottom is in right now. We're still relatively early in the month. We have not even reached quadruple witching yet. We have the debate later today. We haven't got our, as far as for any confirmation on what type of a reduction that we're going to have, like an interest rates and the points. So there's a lot of things that are still in the air, a lot of moving parts that's going to play into the macros here. And what obviously the micro here, or the short term, would be the swaps for like the futures and the options for quadruple witching. So a lot of things here that are still moving around, but this overall is showing the strength of these lower levels here. So we took a look at these time frames in the last few videos, and we stated that this has been a very good zone for price action and for grabbing liquidity since we've had the initiation of this run back in late February, right? So if you can take a look here, like February, let's see, we got into this zone, February 27th, really. We got some strong candles coming in here. And then if you take a look back here, like July 5th, you'll see a strong rejection from this range. Even on August 5th, you'll see a strong rejection from this range. And then even back as late as September 6th, about 4 days ago, you see a pretty decent candle here from the bottom of this zone. And now we've had multiple green days. There's a lot of pools of liquidity here below that 967 mark. As we kind of get closer to around that 8 cents mark, there's a lot of liquidity here waiting for Doge, and it's been very consistent with changing the trajectory out of the 3-4 times we've had to come down and touch this zone. The last major rally would have been from July 5th. We got that rejection. We went all the way to around 14 cents, 14, yeah, a little over 14 and a quarter cents. And then last time on the most recent one would be August 5th, and we went and tested around like 1151, or pretty much went and tested that 72 moving average, 72-day moving average, and rejected. The current one we're in right now is obviously from September 6th. And we are currently in that now. If we were to go retest the 72 moving average, we'd be looking at around 11 cents here. So even for scalpers and stuff like that, you can expect them. This is probably something you can see here as we kind of get these stronger candles. You'll see, even if the ones that didn't take positions down here, they may try and do some scalp positions here and probably take profit around the 72-day. We have a gap here, a sizable gap between the 14 and the 72. So no crosses coming up anytime soon, but that's something that can happen, kind of play out maybe later into September or October, unless we got an aggressive move up to kind of change the trajectory of these overall crosses here. But ever since we got the rejection here back in June, when we were setting up for that major run here to go retest that 22 cents mark, we've been looking for the liquidity to go and retest and some of these higher time frame, some of these higher moving averages here, and we have not been able to do so. We came close around early August, but as we talked about in our last video, it's more than likely, if we're reverting back to more of an organic cycle, we're probably too soon here to start negating as far as for like these signals here and how strong these actual movements are. And another thing I said in my last video, we're very fortunate to actually have this run. That's the benefit of having this run here earlier this year was when we were able to kind of see this run back in from February up until now. Is it gave us a fresh range on the pools of liquidity, right? Because typically if we're charting this, we wouldn't see the price action move like this until that 4-year cycle is technically complete, and we're getting ready to go into bullish season on the 4-year cycle. But this time we had this anomaly here, and we had this actual run up to around 22 cents, and we have a fresh range, like all these ranges here, these zones. Let me refresh here. I believe this is really important for everyone. All these ranges and these zones that we see here, you got like a fresh narrative for where these pools of liquidity are, right? So you're able to see where this is the same chart for those of you that are wondering. I just adjusted the angle, but this is a fresh chart here this year that we are able to kind of expose these pools of liquidity. So this is why I started talking about this zone here, because it's been very consistent with being able to change the trajectory of the trend of Doge. And we don't have to reach back 4 years and say, okay, well, this is what happened last time. We can say this is what happened a few months ago. Buyers were interested at these levels here. Once we get it below 9 cents, buyers have been interested. This was as of a few months ago. This isn't 4 years ago where, oh, the economy was different. Maybe those buyers are no longer interested in the coin. What's it going to do this time? Relying more so on like Bitcoin to kind of get like an idea of trend. Still very important, but we have some much more accurate data here, and I think that this is going to be very important going into the actual bullish season if we're reverting back to a more organic trend. So very excited for that. Do not forget this cycle here from February to that retest of 22 cents. This is going to be very important for charting the layout here and the retest as we go into the bullish season here. So overall, what we're looking for is a retest here of around the 72-day. We still have a pretty decent gap here. So obviously, if we close green today, that's something that we're going to kind of map out. But I'm not expecting any serious price movement until later in September, and maybe we can kind of get like a retest up here. But overall, we still have about a month or so before we are starting to get into that overall time frame of overlapping, so that we can go into Q4 and have that peak run around Q1 2025 if we're talking about historics here. Now, we've had some anomalies this year, so who's to say when exactly it will run? But as we do some of these retests and get some confirmations here with these signals and these zones, we can kind of get like an idea of when the ball is actually going to get rolling. And we can see and do a comparison here to kind of get some projections, because ultimately we see the projections here. People are saying, okay, well, if we haven't had peak bull run and we do have peak bull run, what are the actual projections here? Are we going to have this major run, kind of like what we did back here? We're going to see a repeat. I believe it was like 9 consecutive days of green candles. Are we going to see a repeat of that? And the pools of liquidity are going to give you an idea, but as far as for the overall strength, that's going to be a lot of factors here. That's one of the reasons why I said let's let some of the macros play out. Let's see what Bitcoin is doing. Obviously, it retesting its all-time high and breaking above that is going to be a major signal for liquidity coming into the market. There's many factors that we have to look at and kind of get like an idea. But overall, we're trending with the coin movements of some of the larger coins. And we cannot negate that, especially if we don't have a deviation from what's going on in the market. For those of you that follow my channel, you know what I'm talking about. I'm going to switch over to Coin Market Cap, and we'll take a look here at deviations, if we have any, which I don't believe we do, and we'll get a better idea. So Fear Greed Index is roughly around neutral. I believe that's actually appropriate right now. Bitcoin sitting at 57,000, Ethereum around 2,300. Let's see, Solana XRP number 7, Doge number 8 here. And for those of you that have been here for a while, we've talked about Cardano falling out of the top 10, and they have been consistent about not being in the top 10 here. So we'll see if ADA is going to be able to hold on here. So overall, now when I say if there's going to be like a divergence between price action, I'm not necessarily talking about red and green, because there's some other factors that play into that. Let me scroll here. Apparently I was looking at the wrong one. So here we go. So yeah, 47 on the neutral. I just wanted to show you guys what I was saying. I was scrolling on the wrong one, but 57,000 for Bitcoin. XRP is number 8. Doge is, XRP is number 7. Doge number 8 here. And this is what I was referring to with Cardano being number 11 for 88. So what I was saying was, as far as for divergence, I'm not necessarily talking about green or red or who's positive or negative on the day. I'm more so referring to the charting, right? How are the line moving, right? How are the lines moving, right? If we are comparing price action, the lines, and whether or not the patterns are going to overlap, kind of how we see where the market tanks one day, or the signals, even though the price actions are very different, the monetary value is very different between Bitcoin and Doge. You'll see the candles almost overlap perfectly, right? That's what I'm looking for. I'm looking for the flow of liquidity, because that's not something retail is necessarily going to do. That's going to indicate where the portfolio adjustments are happening across the board in the holdings. And as long as there's not a divergence in that, let's say like this, like for Bitcoin here, we will see, like if we had Bitcoin, like rising here, going on an absolute bull run, and then we saw Doge here falling off of a cliff, then that is a divergence, right? We are seeing a divergence here, a portfolio reallocation. That is a cause for panic here, because then at that point you're saying retail is now going to pump, 50 billion, $100 billion into Dogecoin. So as long as there's that institutional allocation, then everything is fine in my book. So what am I talking about? I'm looking at the lines here just to make sure the patterns are there's some convergence in the patterns, right? Even if you see that on a 7-day, Doge is green here, but the pattern matches that of Bitcoin and Ethereum, even though those two are red on the 7-day. So that is absolutely fine, as long as the portfolio adjustments, the flow of money is lining up. Then on the institutional side and some of the bigger macros, that is not a cause for panic in my book here. So it's something I like to occasionally check. So that's kind of going to let you know where your coin stands in relevance to some of these bigger fish that are in the market. So that being said, let me know what you think about the current trend that's going on in the market. Let me know if you think this is going to be necessarily like a trend reversal. Not saying that the bottom is in. I know we're a little early, but possibly saying that we can, trend sideways here, or position ourselves for some retest here at some of these lower levels later in the month. Let me know in the comment section. If you have not, please consider subscribing to the channel. I appreciate all of you, and I will see you guys in the next video.